What's going on, guys? It's GBP baby. Welcome back to another video, and yeah, let's get straight to the charts. So we're going to start on DXY. Well, you'll notice that I have a second pane up here, and this is the ultra 10-year US Treasury note futures. Again, this is quite advanced ICT content. In yesterday's video I did go through the commitment of traders, so make sure to check that out. But today we're going to be looking at this, and basically the Treasury note are used as like a barometer by ICT in order to recognize any kind of divergence that seems to be happening within the markets. And I'm not going to explain it fully, but you'll find it in month 5 of his content when he talks about using the Treasury notes. Month 5 core content, type in on YouTube, you should be able to find it. And what we'll find is that they're inversed. So that means that when dollar moves higher, this should be moving lower. But recently you'll notice that there is a divergence. Dollar's been making higher lows here. So we've got our low here and a low here. And that means that the Treasury note should have been making lower lows, but you'll see that is not the case. It's actually made higher lows as well. So there is some kind of divergence here, and it's showing a level of strength in the dollar. It seems like it's pushing towards higher prices, which is what I was explaining in yesterday's video. So I just wanted to bring our attention to that, and I'm also going to be looking at divergence that I've noticed in dollar, euro and pound recently as well. But yeah, that's just what I wanted to start the video with, because again, there's all these confluences that are starting to come into play to show that there's some kind of manipulation or some kind of divergence that big money or smart money are putting them are obviously pushing their money into certain currencies, and by the looks of things it looks like dollar, it may be one of them. So anyway, let's get straight into it. So the daily, nothing much really happened. It's looking like we're going to close above Friday's high, which is quite interesting. I do still expect a bullish week in terms I would like to see us run up into this buy side liquidity up here. Again, not much has changed since yesterday's video, so I'm not going to spend too much time at all. You'll see that we traded higher here, closing above this swing high, taking out these swing highs as well. So you can see that we're pushing higher, and the level that I am going to keep my eyes on now is actually going to be this candle. And that's because here we have a pattern. We have a low, a high, a lower low, and then we've traded higher. So that means that this last up close candle here is a breaker. And what I'm going to do is I'm going to drag that out because I want to see how price treats that in the new day. And what do I mean by that? I mean that when it gets to Tuesday, I want to see, okay, does price respect this level? Because if we are bullish and we are likely to run up into that buy side liquidity that we have residing above this swing high and above this swing high right here, if that's the case, then I'd like to see, oh my gosh, computer, stop. Oh my, I apologize. What was I saying before I was rudely interrupted? So yeah, hourly, this last up close candle, I'd like to see this provide support if we're going to be moving. Computer, stop. God. This is ridiculous. So this candle here, I'd like to see it provide support if we are to move higher. So price can wick down into it, that's fine. There's a bullish order block here, but generally speaking, I'd like to see it act as support. You'll also see that this is the Sunday opening price right here, and we did trade below that slightly on as we open on Monday. But I'd like to think that we can find support and push higher, running for the buy stops up here. Now, obviously, price may want to come lower again, but one thing I was looking at as well in this was the range that we're still in. If you look at this from Friday last week and drag it out, and we'll make that a light blue just so we can see. But you'll see how we're just staying very heavily consolidated in this range, and we have been, for like 2 days now, which is interesting. So, like I said, I am expecting an expansion, large outwards of this range rather soon. I'd like to see it happen this week, preferably to the upside, so then we can start getting in on moves. But it's just interesting to see that how long we're consolidating, and they're clearly accumulating in this position in here, knowing that we're going to be offsetting those positions at higher or lower prices. But we have this beautiful imbalance here that I'd like to think will get filled. So yeah, that's going to be everything on dollar. Like I said, I didn't want to spend too much time on that. Let's just go to GBP now. And yeah, I've already got some markings out, so I want to draw our attention to. So let's just get straight into it. So I have this week. This is a weekly swing low that I'd like to think that price can reach down into. I also noticed that we gapped lower, which shows a level of bearishness on pound, and then we have these relative equal lows down here as well on the daily. So, and yeah, nothing much on the daily. I'd like to think that in the new day we can continue to push lower. We can also look at this wick, look at the 50% level off that wick as well. Let me show you what I mean. Fair value gap, extend to the right. So once you drop down to the 4 hour, you'll be able to see that that 50% level, we're very consolidated around it. We keep touching it, touching it, touching it. I'd like to think that this level now will provide some resistance in the new day for us to push lower and run into the sell stops here and eventually down into these relative equal lows down here on pound. You'll also notice I marked out this fair value gap on the 4 hour, and you'll notice that price has wicked into it a couple times, once, twice, 3 times. So 3 times we've traded into this range and price has been rejected away from it. And we've only traded pretty much to the 50% level off this range as well. You see how we're respecting that 50% level? So what's that saying? Again, this is showing bearishness and a suggestion for price to want to go lower. So it's just a matter of waiting. Again, I'm just repeating everything I drew out yesterday, but there is a little bit more detail here. I have got my eyes on this level, and that's because I'm looking at this range. So today's range, as in Monday's range, from this high to this low, this is the optimal trade entry within that range, which is the ICT optimal trade entry. If you don't know what that is, again, type in ICT optimal trade entry, you'll find it on YouTube. But that's that level here. So I want to see how price treats that level in the new day. If we trade through it, so be it. Then we're probably going to trade higher and run for stops, and I'll just simply wait. If we say trade to it in the new day and I see a nice reaction away from it, then I'll start looking for shorts into Monday's lows, and I'll run into that south side liquidity as I pointed out in the daily and these relative equal lows. Simple as that. So that's why I have that marked out here. And what else was there? Oh yeah, I wanted to show you the divergence that I recognize with dollar and euro real quick. So we'll go into the daily and I'll show you what I mean. So I'm going to draw this out quite I'll just quickly show you. So here we have higher highs on dollar, right? So we've been moving higher. These 3 candles have moved consecutively higher. But what you'll find is that also on pound, we've made higher highs. Now, pound shouldn't be making higher highs if dollar's making higher highs. Pound should be making lower highs. But you can see that pound's been pressing higher. Euro, however, has been behaving as per usual. Euro's usually the good boy. Euro isn't making as much higher highs as we're seeing pound make at the same time that dollar is. So there's clear divergence here on pound that's showing a certain amount of strength, which is why in terms of sell side delivery, I'd expect pound to be more strong in that sense, as in I'd expect pound to be the better pair to trade, as it's going to need to catch up with the condition of the euro and things. And we can already see that through this gap that we've had here, showing a level of bearishness that I'd like to think will continue for the rest of the week. But again, we can only wait. Today didn't really give us much, but as you can see, I've drawn out the midpoint of yesterday's price action, 25% level. We have the optimal trade entry level, so we'll see how price trades within that range tomorrow, and then hopefully start looking for setups for the rest of the week. Also, we do have high impact news on the GBP for the week. For example, we have unemployment rate tomorrow, which is definitely going to cause some kind of volatility. And then we also have inflation rate, etc. So I wouldn't be surprised if this is what pushes pound to start catching up with euro. Finally, let's finish on euro. Again, if this episode wasn't very, I'm not going to even go through this again because I did explain all of this yesterday. If this episode wasn't that useful to you, click on the link in the description. It's going to take you to yesterday's video, or at the end of the video. It'll take you to Sunday's review because I explained everything and all my expectations for the week. But yeah, as you can see, I haven't even touched euros. So again, I'd like to see lower euro, sell side liquidity, daily fair value gap, weekly fair value gap here that I want to see continue to act as resistance. That's pretty much it. So that's going to be everything, guys. I hope it was insightful. Again, watch yesterday's video. It's a lot more interesting. Don't forget to like, comment, and subscribe, and I'll catch you tomorrow. Stay safe. Peace.